Alrighty. All right. Last day of March 2026, Tuesday, March 31st, 2026. And off we go. The story goes on, so goes crude, so goes the markets. Pretty much all overnight, we've been gapping down. We were down as low as 100, and we sold off quite a bit. We were up as high as 106, I think. Yeah, 106.79, and it's been a pretty good descent. The first 2 hours last night. And then since then, we've actually made some legs back up. I see here we've actually made it back up over R1, 104, but we have not broken yesterday's highs, 105.32. So when I went to bed last night, I went to bed early. So when I went to bed last night, crude was actually down. It was actually showing this was actually in the negative. So interesting turnaround overnight. But I think the story of the morning, in my opinion, is gold. We continue to make higher lows, at least on the 1 hour. And getting past some of these levels that I think, again, next spot is going to be these 47s. I'm going to continue to watch those 47s, but it does look like we are holding on the way up here, at least in the short term. And I had traded gold pretty good last night. I was pretty happy. Not trading the full-blown contract, but in a combine. And put up a decent night last night, 364. I've been kind of struggling in this combine overall. And I shouldn't say I've been struggling. I've been using this combine as kind of a test bed for a lot of different things. You can see I've been up and down. I've been all over the place in this, having some really nice days, but having a couple of really bad days that have really wrecked this account. But that's kind of where I'm sitting with that. But I am still to the plus. We did get to the plus side in the Express account. Finally, $213 in there. So made a few trades yesterday, and that one continues to be on the mend there. So, and what I decided to do is I decided to keep this one combine here as kind of like a play account. That's where I'm going to test some strategies. I do it in the practice account, but I don't know. I tend to believe that in the practice account, you don't really get, there's no skin in the game there, so there's no emotions that can get involved. At least with the combine, it's, you're working towards something, and so it matters what it is you do. And so I kind of feel like testing things in a combine are much more real world. Not that it's completely real world. In addition, I also have my own accounts that I trade too, in addition to these. So, but we do have gold making a move up, and we are getting near those levels. So we are going to see if we hold and we can break out up and above that. So we're probably going to be trading that Express account today. We are hovering right around R1 here. And we do have the highs from yesterday that we are kind of getting on. We couldn't get through there most of the night. Pretty big rally and sell-off. I mean, not big, but significant, I would say, for an overnight session. And we have not really been able to break out. So quite possibly, is there a breakout trade here in gold? Quite possibly, right? You know, with the break of yesterday's highs, 46.11s. I have 46.10, 80, which is close enough. It looks like we are going to bust those. We haven't been. I'm not really a fan of that trade, though, because I kind of feel like you're getting long in the box, so to speak. You know, short in the box, long in the box are never really, I mean, in my opinion, high probability trades, because what often happens with these types of this thing's acting funky again. I'm gonna have to log out. This gets funky. So when I leave this on overnight, it's very annoying. Very annoying. Top Step X. I don't like the platform, folks, and I'm going to be verbal about it. I do not like it. I don't like the fact that it's completely web-based. I think it would be better if it was an application. Now, I know there's some folks that are saying, oh, it's probably because you're using Safari. No. No, it has nothing to do with that. It's, you know, it sucks any browser. I mean, you know, that's kind of the general consensus, and I think it's another, you know, another kind of reason why a lot of folks aren't using Top Step anymore, because I don't think they like the fact that you're kind of pigeonholed into this platform. But this is what they chose to do. And they're not the only ones, right? There's a number of newer firms that I've actually come around that are offering the same interface. Like, so this is not something exclusive to Top Step. I did notice, I can't remember offhand the name of the place, but I saw an advertisement yesterday for another firm that uses the exact same interface, and then their thing is just private labeled. I mean, it is exactly the same as far as the performance. So TradingView is actually, you know, licensing this out as a private label product, right? You sign up for a license, you can private label it, call it your own. I'm sure there's different subscription levels, right, on what you're available to have, you know, indicators and whatnot. And that sort of thing. So I think that's, but I don't like it. It's not very user friendly, and it's not very customizable. So anyway, with that being said, let's kind of go back to the charts and keep an eye on gold here. I don't know. I'm not really a fan of this breakout trade. I'd be more likely to possibly take a short up here at 46.40 on that gold. That is an R2. I think that I think that's a good. I think that's a good spot. We have not been able to. We weren't able to get through there last night, and you know, and even watching the price action last night at that price, there's a possibility that. That may be a real strong area of resistance today. That's R2, and that's at 46.40. And that would be on 03/31/26. All right, and then I'm actually just going to make a note in here overnight strong resistance. And the reason I think it's important to, when you're putting in alerts, like, you just, especially if it's an area of significant importance, that you put context around it, especially if it's something that you're deeming important. Like if it's just a level you just want to be alerted at, that's fine. But I always find that when you put text and context around some of these alerts and these areas, it just gives you a better insight, because we have no idea when this is going to hit. This can hit in 20 minutes, 10 minutes. It could hit in 20 days. It could be a week, and then you get the alert, and then you don't even know what the hell, right? A week goes by, you completely forget about what it is that you were experiencing or anything else. It's kind of a way to journal, I think, as well. So I think it's really important, especially for newer folks out there, that when you do put in alerts, put in a little description and write it down. Write something down. And even go as far as these tools that we have today are phenomenal. You could put text in here if you really want to, and just throw text in here. I mean, I don't do that because I don't like my charts to be messy, but you can very absolutely do that and just put around, overnight resistance, and put that in there. This isn't letting me move it though. Okay. But you can do these sort of things. I think what's probably better than that is, do these. I always find this, I'm finding this ray right here, horizontal ray, is a very nice one. More so than I was using this one, if everyone knows the price range, and then I was making it very thin. I'm finding that the ray is actually a perfect place to post and put in levels, especially if you don't have them on here and you want to mark out a high, right? You just click on the top of the candle. It will actually automatically put it in, and then you can just double click it and write in whatever text you want. You make it white, you can make it red, whatever you want. But then I can actually go and write in here, overnight resistance. And it will actually put in a little kind of note for yourself to just be aware of that. Again, you can see I don't do that, but again, if this helps, by all means. And I say for newer folks, is, I know why I'm doing what I'm doing now, because I've got my system. So, I'm not, but for newer folks, I think it's important for you to write a lot of shit down, because look, I know a lot of folks talk about journaling and all that stuff. I was never any good at it, because by the time I actually sat down and wanted to write shit down in my journal, or so-called journal, and even when I was trying to journal right after I didn't know what the fuck to put in there. I had no idea what the fuck to write in there. I had no idea. Explain to me what your trade was. Well, the short of it was, I thought it was going up, and so I bought it, and it didn't. Okay, all right, you know what I mean? So I've never really been one. So to me, I actually found it better to journal through my alerts and the charts and make those informative. And it's kind of a way to journal without really journaling. So anyway, just let that be kind of, because I honestly was never a journaler, because I would even write stuff down. And I know at the time, I want to say, and this is years ago, because it's always been a thing. And I'm not trying to diss anybody. Look, if that helps you, go by all means. I'm not telling you not to do it. I'm just telling you my experience. I just never like when I went and looked and read back through my journals, I would say to myself, dude, man, you need psychiatric help. You're fucked up. I don't even know what the hell you're talking about. I mean, and maybe that's what scared me, because I'm like, what were you talking about? And then, I would write things in there like, I took a 3-bar reversal, or, I bought support. And, now that I've been doing these kind of trades now for 20 years now, I don't need to write. Like, I know if I'm buying something, chances are I'm either hitting resistance or I'm buying support. Like, I'm buying support or I'm selling resistance. Like, I know that now. And so anyway, but I am starting to journal again. I did it last night because I am starting to use and trying to incorporate some different kind of strategies that I have never really traded over these years. I have been a true like volume profile, support and resistance kind of person, and never did like the breakout trades or the retracement trades. Like, I've never done those trades, and I'm starting to find myself do those more and more. And I can actually test it to the guy, Dakota, on Top Step, who does a lot of those trades and actually explains, like, no one to me has ever really explained it and demonstrated it real time the way he does. He literally demonstrates it real time. And I've actually been learning quite a bit after 25, almost 30 years trading futures. I'm actually learning from someone who's been doing this less time than me and knows how to do those setups. So hats off to him. But that's anyway, that's my shtick. And that's what's going on with gold. I kind of like this 46, 40, 90. Now, it's important to understand, and I always reiterate this, it's really important how we get up here. If we get up here with kind of momentum that we're getting now, it's going to be a perfect trade. If we run up there really fast, chances are it's going to break out and it's going to explode through there. And if you go on a 4-hour chart and look at the profile on gold, and you noticed here, if we break out of here, right, we obviously have these 47s. If we break out of here, there's really not a lot of tree branches. There's a few spots where it may slow down. There is really not a lot of tree branches here for this thing to go. I mean, this thing could really run to 5,000 really fucking fast. I mean, if they get any kind of real buying momentum in here and kind of, going, it can run through here pretty fast. There is like nothing here. And you look at this profile, and I will get rid of some of the drawings just to clean it up. But break of R3, and you see it's nothing but holes. Again, you have some areas here where it might slow down, but there's really nothing stopping this on a good volume day in gold and maybe the right sentiment, and you're going to see this thing just skyrocket through here. And you're talking about back to 5K pretty fast. Now, I'm not saying that's going to happen, because a lot can happen between now and then. Some pedophile diplomat who sits on, gazillions amounts of gold decides to dump it. I got no control over that. But, all things being normal and this continuing to do what it's doing, it's very likely that this thing is going to blow through this area really freaking fast. And so if I was going to mark up an area, I am going to mark this up, because I found this to be very interesting. I kind of stumbled on this last night. If we can do this. And this is going to need to go over here. This is R3. There's a little teat sticking out right there, but you see this massive. I'm going to change this color too to just kind of give it a little bit better. I'm just going to do that, and I'm going to do I think I changed the wrong thing. Yeah, I did. I changed that. But anyway, change this to like just a yellow, just so you can see it. But there's a little teat down here, and you literally can't really see any profile in here until we start getting up near 5K. So to me, that's a really interesting area. I'm going to probably keep this marked on here. I mean, to me, again, and then that would be the break above that level right here, those 47s, those 47.50s, 47.35s that I've been talking about. That if we get up over that, it is going to be it should be a bit of a trend change for gold, because we have been on the downs, right? We have been trending down. So anyway, that's, my analysis of what's going on with gold. And the way I'm playing this is not even just through futures. I'm playing it through the GLD, which I didn't turn on my platform on TradingView. I'm going to try and bring it up on this. There is, I think, options now on TradingView, and I haven't looked at these. I looked at it a while ago, and it kind of sucked. This doesn't look that bad. It's a little quirky. I really don't like this like highlighted shit. I think maybe that's for the misinformed. I like a lot. I guess those are in the money, out of the money. I don't really like that. I just lost my mouse. What happened? Right, and then expiration next 30 days. Let me do. I mean, pretty interesting. I haven't used these, and then I've been using the GLD. I'm going to see if I can start using this a little more. Because as I mentioned, I'm really not very happy. I'm really not very happy with. I'm not very happy with Tasty Trade. I'm really not. They are very bad. Platform has been extremely unstable. And if I was looking at something here, I would actually look at, see, the only thing I don't like about this is it doesn't go out far enough. Let's see, September. Yeah, it doesn't go out far enough. I guess you have to like filter it. I want to go out to January. Yeah, I'm going out to January's. And then what I'm doing is I'm buying about the 30 Delta calls. I don't see that in here. This says spread. Strategy finder, bullshit. I don't see Delta. Can I change these columns? Why is there no Delta in here? I don't know. Maybe it's here. Again, this is new to me. Here you go. Straddle. I do not see Delta. I don't care about distance. I don't know what the fuck that is. What is distance? What the fuck does that mean? What is distance? What is that? Is that Delta? Is distance Delta? So they're calling distance Delta, maybe? Yeah, I think that's what that's what it is, right? No, that's wrong. Where is Delta? There is no Delta. Why do they have no Delta in here? Oh, there's Delta. I don't need this. I don't need that. I don't need that. I don't need that. I don't need that. All this, like, this is all bullshit. All this stuff. Bid percent. Fucking crap. Theo price. Bid ask, you definitely need. I don't know what the fuck that is. I don't know what distance is. I have no idea what that is. I have no idea what that is. I don't. IV spread Delta. I don't care what theta is at that point. I don't give a shit. I know what theta is. Gamma, unless you're trading indexes, doesn't matter. Vega doesn't matter, and Rho doesn't matter. So really all you want is delta and then open interest. That's the only other thing that I don't see. Yeah, that's the only thing I don't see on here that's actually important to me, open interest. But anyway, these options are very liquid anyway. These options are very liquid anyway. So you have delta. So what I'm looking at here with the delta is I'm looking at buying the 30s. The 30. So around, this puts us around 515 on GLD. And then just go ahead and buy the spread. So you would do like a, and yes, I don't, see, it doesn't let me just like select it, which is another problem. Like I haven't played with this. So, you know, again, I'm trying, it's new to me. I'm trying to see if I can use it. I don't believe I can. Launch builder. Oh God. I mean, it does come up with the nice delta and then your gamma risk and your theta, and you want to come in here and look at that. That's actually pretty cool. I guess you have to do this and then say I want to buy a call spread. Oh God. Create strategy. All right, so this is dumb. I don't like this. I don't want to create a... I just want to fucking buy it. But it doesn't let me. So anyway, I don't want to go through all this. So this is their thing. It's fucking garbage. I can't stand it. Sorry, just too much. So anyway, I'm doing the GLD. I don't have the platform open. I'm not going to open it now. So that's how I'm playing gold. And hope that helps. So... I know it didn't really help showing you an options chain that's complete garbage, but we did break. We did break yesterday's highs. We're up about 61 handles, 60 handles or so in gold, and we will see what happens. Markets look like, you know, let's hope they hold. We had this same look yesterday, and nothing held. As far as the Russell is concerned, I do like these R2s, 24.98. R2 24.98, very good level, and it's also yesterday's highs. And then all else being the same, R3 28.70s look pretty interesting as well. Now, to the downside as well, S1 I think could possibly be a trade of the day, especially if we get weak today on the open. And we kind of sell off a little bit like we did yesterday, maybe not as extreme as yesterday, but if it is a little bit of a sell-off, we have an S1 at 24.18 and also this swing high right before that big candle that we got where the basically it was the announcement that everything's over. And then it then turned out to be it wasn't over. So there's that. And that is pretty much it on the Russell. I'm really not going to go into much more than that. Do have the other levels here. Look, if you want to take those trades, I'm not really going to be a fan of those to the downside because they have proven to not be good bounces, especially in this market. Because when we get that kind of momentum in selling right now, to the downside, a lot of these support levels just have not really come true. They've just kind of blown through them like they don't even exist, and they don't actually exist, but it's even more so now when we get any semblance of selling. It seems to be a rush panic out the door. Now moving over to the ES. ES has probably traded a little better. Go to the 1 hour. ES has probably traded a little better than most. I think it's probably done better, even better than the Nasdaq. Nasdaq's been a rough trade. I mean, if you've been able to catch it, fine, but it's been all over the place. Not my cup of tea. But same sort of thing here on the ES. I got an R2 at 64.85, and then also highs of the day at 64.81. So you're definitely going to want to watch that area today for possibly a little bit of a retracement type of thing there. R3 doesn't really play any significance on the ES. Really, no levels kind of even stick out until we get up and above R3. I would call out 65.44s. And then again, probably up here at 606.25. But if we're talking about these levels today, that's a good thing. I wouldn't try shorting that. I mean, all things are going good. The market's doing well, and hopefully it's like a freight train where it's continues to kind of barrel higher. Is my hope. To the downside, again, and once we start getting past S2 and S3, I don't know if I'm going to want to jump in on those on momentum to the downside because I don't want to get run over. And then the NASDAQ, we'll put the NASDAQ up. Same thing. NASDAQ looks extremely close to the Russell. We have an R2 at 23,585, and also the highs of the day yesterday, 23,566. All right, it's about 200 points away from where we are now, but with the NASDAQ, that normally does not take very much. Then you have R3. To me, looks like a pretty good spot for possibly some resistance. 23,795s, and then up here at 23,860. So anywhere around in there. But again, if we start pushing R3s, I'm thinking things are going pretty good in the market. It's got a lot of buy momentum. They might not set up to be such great trades as things are going well. Possibly oil's dropping below $100, and we're getting a pretty well-needed rally. All right. So that's about the size of it in the equities. We went over gold. I will briefly put up copper. I do think copper is kind of in the same boat as excuse me, I think copper's in the same boat as gold, where we're continuing to make, you can see I have these lines marked, we're continuing to make lower highs. We made yet another lower high yesterday that can be marked, which is also yesterday's lows. I think, we're better off with long trades on copper, on pullbacks. We are getting to a little bit of an area in copper where it does look like it could get a bit toppy in here. We have an R3 today at 56,195. I think that's going to turn out to be a pretty strong area of resistance, as well as R2 55,670. We have not been able to get through that. You can just look through here, and you can even put a mark there, and we have not been able to get through that literally for over a week. So going to be a very interesting area up there as we get there. Conversely, the downside, we have not been able. So we're stuck in here, and we're eventually going to break this, either to the upside or retrace back down. But again, we have a lot of resistance up here. If we are, however, able to break these levels where copper is kind of looking exactly like gold is, where we have this huge kind of like void here in the volume profile. Not a lot stopping this. If we are getting it up here with some momentum, quite possibly, we get back to 57s or, as much as 580. So, again, copper in this, I guess, recouping a possible bullish trade, because you can see before we were kind of on the downside, right? Higher, lower high, lower high, lower high. And we've kind of reversed that over the last week and a half or so, the last week and a half or so of March, right? Higher low, higher low, higher low. We'll see, again, we need to start breaking some of these lower highs in order for this kind of to flip around. So that's kind of what's going on in the copper world. Outside of that, bonds have actually done hopefully what I've been wanting them to do. We have possibly, again, I don't know, but it does seem that we did hit a bit of a bottom here short term at 111s. And we are building a little bit. We do have this kind of spot where it kind of took out. But we are building again a bit, to the upside. It's got a long way to go. I'm not going to deny that. We got to get through some pretty heavy levels. We got to get through 114s. And in order to get up over 114s and get into the 115 range, we got to break this 115.11. And then quite possibly we can get into, maybe another leg up where this thing is, carries bonds back into a possible bullish, or not even a bullish, but not such a bearish sentiment. But it's got a long way to go. But you know what? A few days a week does not a trend make. So, it does have a lot more room to go if it is going to go. All right. And so I covered all of the majors. I'm not going to go through grains because ho-hum. Silver, I wish I had more to say about silver. I think silver is just kind of a, and I got all kinds of crisscrosses going here. I don't know what that's all about. But silver here about to break this downward trend. We'll see what happens with it. It needs to break that downward trend and actually start using this as resistance. And then maybe we start seeing silver, doing a recovery as well. But, I don't trade silver per se. I just think it's too light. The volume in it's too light, and it's too big. It's too big for me to trade. Way too big. Even the micro is way too big. So I stay away from it. What else? We could talk about Natty. I think Natty actually is kind of, in that stage of its cycle where, it is going to be likely to see some drawdowns in Natty, right? Tis is the season for Natty, right? We're getting out of the winter months, and tis the season for Natty to kind of consolidate seasonality-wise. And that's really it. And as far as stocks, I see a lot of stuff got absolutely pounded yesterday. We got Micron that just got freaking smoked yesterday, and this one's finally kind of coming back into some reality because it's just been on a tear. Probably classic double top or an M pattern. Anybody follow Elliott wave? The M pattern. But a lot of these have now come back to reality. I don't own them. I never did during that whole thing. I mean, I guess maybe inadvertently I owned them because I owned some, I traded the Soxol and, a couple of ETFs that have it in there, but so I don't own them outright. But they are coming back into reality. I don't believe they're going to keep their pace of what they've done, although they are probably having a decent day today. No. But just because a lot of these were up yesterday, it was a bigger stock rally yesterday. It seemed like the bigger stocks that have gotten beat up got a lot of love yesterday, and I think it's really geared more toward that they're so beaten up. And I think it's like, if you're going to buy and you're going to put money to use in this market, you're going to buy the big guys. And software surprisingly had a pretty decent day. But as you know, my thesis is I think you short into this strength not specifically CrowdStrike, but many of the other software names. I like the IGV the best, honestly, but I think he's short into those names. And then surprisingly, even Apple kind of had some rough times today, but I kind of like Apple long here. I like Apple long. I think if I were going to be doing anything in Apple, I'd be probably doing calendar spreads right now. I wouldn't be selling puts. I know everybody wants to run to the, sell premium, the premium's high, blah, blah, blah. One thing that I've learned over the years with selling premium, when it's over 20 and it has a propensity to go down relatively efficiently, I would say, not just quickly, but when volatility itself is over 20 and you're buying high IV stocks and you're selling premium on high IV stocks, that to me is a pretty solid strategy. When the VIX is at 30 or 28 and it's been staying elevated. And look, volatility does have we all know volatility does have the natural flow to contract over time. And we understand that. But when you have markets like this where volatility has stayed and not only stayed, but also expanded, you do not want to be selling anything, folks. You don't want to be selling premium in anything. Because you are not millions of dollars liquid where you can afford to hang in these trades. Now, I'm not saying it's completely, knuckle. If you're doing something risk defined, I guess that's fine. That's fine no matter what you do because your risk is defined. I'm talking about doing like naked type shit, naked strangles, naked anything. You will get absolutely effing wrecked. And the problem is you're going to wreck your account and make it to a point where it might take you years. It might take you a year or more to recover from it. Please, just take my advice. If you do anything, avoid a lot of these so-called premium trades that look real juicy. And you know what? And maybe 3 months from now, you're going to go and look back and they'll say, yeah, this one really worked out. But you know what? I guarantee it. There's going to be 5 others that didn't, that actually just blew the fuck up. And those are going to be the ones that take your account down, not the one that worked. So I'm just speaking from experience. I've been here, done that too many times. And in the last 5 years, I kind of snapped out of it that, look, there's a time and a place for every strategy. There's no question about it. And to me, stick to risk-defined stuff. Even if you're selling premium, stick to risk-defined stuff because volatility can stay high longer than you can stay liquid. And, do you really want to be hanging in these fucking trades and then rolling them? And look, the roll is fine and all that and, mechanical and all this bullshit. But you know what? After you roll once or twice, you're fucking cooked. Face it, you're cooked. You're not getting your money back 9 times out of 10 after you've rolled the second time. And all you're doing at that point is you're fucking feeding Tasty Trade commission. That's all you're doing. You're just better off after the second, make a rule, which I have done myself. After the second roll, so you roll once, maybe you roll a second time, maybe, after the second roll, cut that fucker out. Cut it, cut your losses, move on. Don't manage it anymore. It's psychologically better. Trust me. You'll be better, psychologically than looking at that fucking loss on your P&L every day. And trust me. And then you'll recover quicker by doing another trade in that underlying to make up for it than trying to force that trade to be profitable. All right, and so that is kind of all I have to say. So what I like in Apple is I do like the calendar spreads. And if I was going to be doing a calendar spread in Apple, I would probably look out to a June, May. I'd do like a June, May. And then if I wasn't going to do a June, May, I'd probably look out to maybe even September, September, May. You know, I'd even do it that wide. All right. And so that is that. And I do like Apple down here. I think, you know, although there may be some more downside, I think you got a lot of support down here in the 240 area. So much so that I actually sold 250 puts out of the money, mind you, but I sold 250 puts, but I am out in December on those. So anyway, that is kind of how I am playing that. And I'm still avoiding a lot of these other flyers. As I mentioned too, I think Palantir is in a decent spot for you to possibly, you know, again, I would stick to the calendar spreads. I would stick to doing calls and stick to calendar spreads. And the reason I'm saying calendar spreads, I think calendar spreads are very powerful right now because you can buy an option that's out in time, like say at June, and then sell May, and then the volatility in May is going to be higher than on the shorter term option. And then you have the ability to roll that piece instead and still hold on to the call. And it kind of prolongs your involvement in that trade and gives you some options. So if it doesn't go back up as fast, you can make a little bit of money and a little staying power in that shorter term option. In the shorter duration. So, you know, anyway, something to consider. I think, you know, calendar spreads are a great strategy in this type of market. You know, again, if you want to be aggressive, you know, sell the puts under 130 then. You know, if you want to be aggressive, go for it. But, you know, it's just not in my wheelhouse right now for that. So that's really all I got to say about that. You know, we'll see all these big IT stocks, big tech. They all need to post up a few days of gains before I'm going to be ready to just say, all right, you know, maybe the bleeding stopped. I just don't think it has. So I'm going to throw this out there. This is kind of a weird take, and I don't know how people are going to take it. But what if for a second, if anyone's familiar, and it's probably going to be, I think most of these new IPOs are likely to go on the NASDAQ or the New York Stock Exchange. But just picture what's in the pipeline this year. I think there's about 20 deals. There's 20 IPO deals that are slated to possibly come to market this year. And I'll put this in perspective, and I'll just put this on the 1 hour. Put this in perspective. What if this sell-off in this market had nothing, absolutely nothing at all to do with oil prices, has nothing to do with oil prices, has nothing to do with the war in Iran? Maybe to a degree, maybe, 100 points on the ES, maybe about 500 or 600 points on the NASDAQ, but overall, none of this had anything to do with it. What if this sell-off had everything to do with all these deals that are going to be coming in June, July, and August? Think about that for a second. And these deals are slated for, I think SpaceX is like, they're talking trillions. They're talking trillions of dollars for these deals. And SpaceX is just one of them. So put that in perspective. So maybe this sell-off has nothing to do with that. Maybe it was just an excuse to raise cash to support these deals that are going to be coming down the pipe in June, in July, and August. Think about that for a second. And I'll leave you with that. I think there's some merit to it. Because if you look at things overall and you look at these companies and you say, okay, but earnings were all good for the most part. I mean, they all kind of guided down because that's what you do, right? After a few quarters of, beating guidance. You kind of give Wall Street a kind of a nugget and say, yeah, we're going to guide down, right? It's all part of the game, folks. But what if all this sell-off had to do with just making sure that there was cash available to support these deals? And that it's ample time that, look, we're gonna raise all this cash to support these deals, and in 3 months from now, the market's likely going to be back up or looking good for these deals to come through, and there's going to be all this cash sitting out there just ready to just get dumped into them. Because look, one thing about markets overall, like there's no real new money, right? It's basically coins. I always look at it. It's coins in a fishbowl, and you're just spinning them around every once in a while, and and they spin around, and then you're just looking for the ones that land in the middle, right? And that's all it is. And then they spin it up, and they kind of create chaos and turmoil and shake it up, and then see which ones, and it's just money being passed from one spot to another, money in motion. So anyway, just leave you with that. I don't know if it's true. I kind of like that take. I think it's interesting because, they are going to need boatloads of cash to support these deals because it's not just going to come out of thin air. And so something to think about. Anyway, have a good one. Markets are looking all right. Let's see if we can hold it. Haven't been able to hold any rallies yet at all. And hopefully I will be back tomorrow. And then, again, leave you with that one about the IPOs that are coming out. Look at the list. I have it saved, but I know SpaceX is one of them. I think Discord is another one that's going to be coming out. And there's some other ones that are like that I haven't even mentioned that are also like upwards of, a few $100 billion, like $600-700 billion, like massive deals. So money's got to come from somewhere. So have a good one. Trade them tight, and I will be back